Welcome at forextrading.com. Let's discuss a real trade example that happened yesterday, 22nd December. We see at pound a 4-hour chart intensive sellout moments. So the trend is clear. We came back to big downside trend, and I were looking for the third time to come into the market to sell some short pound dollar currency pair. So pound recently is much more interesting than euro. That in euro is only reaching some lower points due to pound sellout and markets behavior. So I was focused at pound. So let's come and see at 30-minute chart how it really go yesterday. We see the situation here that happened in this downside trend. For many hours, market was moving in a small channel, which is visible also as this blue line wave you could call flag or pennant. Let's zoom in a little bit to see it more clear. Right now we are looking at this flag that we've seen at the more far view of this 30-minute pound chart, and this flag was supposed to finish at some time. Of course, some buyers could came in. I would ignore that signal, that long signal, and I was very interested in coming here short after opening European markets, if it really would be an interesting move. And that's what really happened. Just after European markets opened, we were seeing the start of the sellout, which was a little bit too early, because 2.5 hour or hour and a half after the opening markets, we were supposed to see important data, important news coming out at the pound. So I don't really enter the market, even though it's moving very attractively. So it is strongly suggested not to enter the market just half an hour or 45 minutes before important news are publicated. And that's what happened here. We had a short opportunity, but the news publication changed the market for 50 pips, and the growth could be much stronger, much bigger. So I wasn't really sure if those news that came to the market really will move the market to the upside, or we're gonna come back to the downside. So let's zoom it out for a few moments. We see it here that markets came, broke some support resistance, and came back to the upside because of this news publication. So I was waiting if those news gonna drive markets higher, or we gonna come back to this broken point, or this one right here, when support resistance, important one, was broken and came back for a few moments. But we seen, maybe those two candles didn't tell us exactly, but those shadows started to tell us that we might be coming back to the downside movement. So those beautiful shadows are telling us that it might be an interesting move to the downside, and it really was. So the market broke it again. This candle right here, we can zoom it once again to see it more clear. This candle right here show us we are coming back to the downside movement, and the price came back for a few moments, and then it started to going down again, and it was very interesting point to enter the market right here. Just a few moments after this candle came back and show us it's not really going to move much more forward to the upside, because we made those signals, because the price doesn't feel comfortable in the upside, and it's moving fast downwards. So it was a very interesting setup, very clear. Maybe not the perfect one, but the probability that we're gonna go down was much more higher than the market will stop or the market will start to go and higher again, because you see those shadows and signals told us that market doesn't feel comfortable at this level. This was just a public news publication and a behavior just for hour and a half. So I was entering the market here at this point about 54.34. That was an interesting setup to come into the market, or just above this point. So few pips after this candle showed us it's going down again, we could enter the market with beautiful breadth of the breadth here was about 20-80 points, so you could take a 20 points breadth to sell it a little bit higher than we could enter the market right here, for example. So it was a very interesting trade, and you didn't really have to wait till those points will be broken again. I mean, this candle, we didn't really have to wait till it's broken again. Sometimes you just enter the market because the situation is attractive, and the candle before broke it down already for the second time. So we were looking for a continuation. And stop loss for this position should be here. The safe stop loss should be just above those two shadows candles. So we were talking about 30 points stop loss, which is very attractive to this kind of movement, because we could hit 150 points movement from this particular level. After this market entrance, we seen a beautiful follow through, aggressive move to the downside, and we seen some retracement, a little one. So we could take the profit of 50 points right here when the market came back a little bit, or we could wait a while to take more profit. So I'm usually taking the profit like it is when the market is retracing or finishing the intensive move. I'm taking the first part of the profit, which would be almost 50 points at this level, and the second part of the transaction during the day was left, or is always left, at the market to see if the market is gonna following the move for next few hours or next couple of days, for example. So this move was taken here for another 30 points before we came to the late night, and this kind of Japanese and Tokyo Asian behavior that we've seen many times before, as the market finishing the day movement at the European and US session, we go to the Asian time when the market is moving opposite way, like it happened here. So that's why most of the time I take profits, or half of the profit during the day, to make sure the Asian move will not close my position at a zero break-even point, when I already moved my stop loss to a safe place, when we have zero loss, potential loss for a future movement. And it almost stopped out my entrance, as you see, few points higher, and I would be stopped out with the second part of the position. Fortunately, it didn't happen. The market is still moving to the downside. So thank you very much for listening. It was an interesting setup with a little fake break just before the news publication. So somebody who would do this trade, looking at beautiful flag, for example, and markets after open European markets started to move downwards, and really it was a classic beautiful move. But if somebody didn't know, the news are publicated at hour and a half after opening and after starting this move at the European session, he could be cleaned out with some short stop loss, or we could panic at this kind of movement if somebody didn't know what's happening, because we could move much more higher and higher because of those news publicated, but it didn't of course happen, and we see the price hit another lows, which was comfortable to enter the market after a news publication. So it is a simple example of how not to enter the market just before a news publication, even though the technical picture is very clear and very beautiful. So somebody might to look after a few weeks at this picture and the flag broken to the downside and say, hey, but this trade didn't really follow through, this pattern doesn't really work. And I would say that of course it's work, only you shouldn't come into the market 15 minutes or 45 minutes before very important news are publicated, because the market can turn back and clean you out for your stop loss, and it is very important to remember about that. So thank you very much for listening. I hope you see some more interesting trades example. Thank you very much.